W.L. Ross is one of the biggest players in the world of distressed investing. The firm is known for finding opportunity in areas where most others don't go and dare. Joining me now is Jim Lockhart, Vice Chair at W.L. Ross. Jim, that's exactly it. Don't dare. This very week, last Monday, we sat here and talked about the banking industry and how diminished P&L, regulation, D.C. coming down on banks. Who wants to go long banks in here? By Wednesday, we said, God, nobody should be short banks. And you are saying, I'm going long in a big way. Why?
Well, we really believe that in the U.S., for instance, that the smaller banks, the community banks, really are a great play. They're going to grow, they're going to consolidate, and we've been a big investor there. In Europe, we're an investor in the Bank of Ireland and also Virgin Money in the U.K. And our thesis there is in both countries, they faced up to their problems. They're starting to take real actions, looking at pensions, looking at the public sector.
But do you think these banks are really being honest about what they have under the hood? Have they written down all their toxic assets?
No, they haven't. If you look at the European banks, they're incredibly over-leveraged. They're going to be selling hundreds of billions of assets over the next few years. They're going to have to raise hundreds of billions of capital to sell those assets. But doesn't that uncertainty
make it a difficult place to play?
It does make it a very difficult place to play. We're not investing in continental European banks at this point, but we've been looking at them. But we think they're going to be selling a lot of assets. We're actually buying something from Deutsche Bank here in the U.S., a multifamily originator. So we're starting to see banks starting to sell assets, and we think that will be a good opportunity.
Do you think once a deal, and we're hoping a deal is struck, it'll be off to the races for European bank stocks?
Well, we're certainly hoping a deal will be struck this week because we're getting right on the edge at this point. No, I don't think it'll be off to the races. As I said, they got to raise a lot of capital, over $100 billion. And they're going to have to mark down their assets, so it's going to take a while. Certainly there would be a bump up, but it's going to take a long time to work our way through this problem.
Do you think this week is different than all the weeks we've seen before? And we've had a number of summits before us. We're waiting, big number, they're coming together. Do you really think this week is different?
I would like to hope so, but it's going to be difficult. They've muddled through so many times, and they're getting closer and closer to the edge of the cliff, and they're going to fall off if they don't get their act together.
Do you think the U.S. banks have really shown what their exposure is to the sovereigns? I mean, I know that's a huge issue for a lot of potential investors.
Well, the smaller U.S. banks don't have any exposure to the sovereigns. The bigger banks, I think, are disclosing reasonably well at this point, but, there's a lot of CDSs, swaps, and all sorts of things that you really can't get behind.
Now, is that specifically why you like the smaller banks, because they don't have this sovereign exposure?
That's one of the reasons, and they're less regulated. They'll have over time the opportunity to consolidate in the U.S. and build to, say, 5 to 10 billion and be really good, strong regional players. I think the bigger banks in a lot of the countries, whether it's the U.K., Europe, or the U.S., are not very well liked by the consumer anymore. And what we're looking for is consumer-friendly banks, like our Virgin Money is in the UK.
Now, you're looking at banks as an investor. What about as a counterparty? Now, in the past, if you were sourcing, you were going to banks for illiquid assets. Banks are doing less and less in those spaces. Where are you sourcing from now?
Well, from our standpoint, we have limited partners that are investors in our funds. But we are borrowing money from banks. We have a mortgage servicing company in the United States that's a big borrower. And the U.S. banks have a lot of cash.
And banks are willing to lend?
In the U.S., yes.
Wow, well, that is a huge vote of confidence for U.S. banks. We keep hearing no lending, no financing, so banks are willing to lend to W.L. Ross. That is a positive for both you and the banking industry.